Good afternoon, guys. Good morning. How's everyone doing today? Let them come in. Hope everyone having a good day. Just waiting for Rego to join as well. And then we'll get started with our Wednesday macro stream. Certainly a lot of things to discuss. Many things happened that have influenced our market as well. Luckily, it's looking a bit better compared to the recent developments. We got it looks like to be a peace agreement in the Middle East. Still fragile, of course. We don't know for sure, but it looks a bit better. So let's discuss everything with Rego and see what it means moving forward for our markets. Can you guys hear me, by the way? I mean, I didn't see anyone saying anything in the chat. No?
Morning, good afternoon, good evening.
Hey, how you doing, Rego?
Good. How are you?
Pretty chill, pretty chill. Ready for the stream.
Yeah.
What do we got? Let's get going.
I'll be honest, I've been pretty pretty out of the loop. Only started paying attention to markets again over the past 2 days, so I missed quite a bit of shit.
Yeah, I'm sorry for your loss.
I
My
appreciate it.
condolences.
Thank you. Thank you.
All right. If that's the case, then maybe I can make an introduction
Yeah,
just to
absolutely.
cover.
I mean, I came back to um, a lot of positives. I want to say a lot of positives when I started to get back to my office. A lot of the worst seems to have subsided, at least on the macro front when we're talking headlines. And you know this market right now with the dried up volume is very news dependent, and
Yeah.
that's pretty much what everybody is basing trades off of. It's pretty much what everybody's following. The volume's quite low, right? It's summer, so I like to think that we got some a pretty good response with all things subsided. So from what I can see, um, it's a good start. It's a good start. But with summer comes a pretty boring environment. So but yeah, take it away, DB.
Yeah. Yeah, absolutely. A lot of things happened. We obviously had the geopolitical tensions over the last weekend and pretty much over the last 10 days. It looks a lot like there is some light at the end of the tunnel, right? At least there's a ceasefire between Iran and Israel, and we also have the attack of the United States on Iran behind us, which makes me believe that the worst is behind us in terms of developments, but also in terms of price action. Initially, the market reacted quite negatively to the developments, especially altcoins, which is only natural. War fought, that's a very normal reaction, right? What's to be I mentioned is certainly the reaction afterwards. But we also have to say that the reaction of stock markets has been impressive, right? We barely had the S&P 500 and Nasdaq dropping because of these developments, which make me believe that this strength in Bitcoin was also due to this factor, right? I've said it before. Bitcoin has matured a lot as an asset. It's more institutionalized the cycle, and its price action will also depend on the price action of stock markets. And given that they have been holding relatively well, Bitcoin did too. We got a nice reset across the market, back down to 100K, a little below that, but I think that was needed because we needed some RSI resets across the market, especially on altcoins. So I think this was it. Now, what that means in terms of macro developments, it means that inflationary pressures are decreasing a bit because due to the ceasefire, oil prices have also decreased, which is really nice when it comes to initiating an easing cycle by the Federal Reserve. We did have a few positive comments by Powell yesterday. He attended a committee and where he talked a lot about monetary policy. Has been asked for hours and hours about it, and where he said that rate cuts may come sooner if inflation numbers are in line with expectations and if tariffs do not increase inflation the way we expect it to do, right? So that will be very important to monitor. I do think it still it still matters, and not necessarily for Bitcoin, but maybe more for the risk appetite overall in the market, right? The interest rates have been high, no doubt about that. The Federal Reserve has not been easing in the last few years by tightening, different from other central banks around the world that have been easing, like the European Central Bank and even China, and it does impact liquidity in my view. Now, what is different from last cycle, that's a fact, not an opinion, is that we have the Federal Reserve of the US tightening while we have other central banks easing, right? Whereas in 2020, 2021, we basically had all central banks easing, right? Which makes it a bit macro difference regarding this cycle. So I think that the sooner when the Federal Reserve starts easing, the better for risk assets, because that will keep the dollar weak. And given that oil prices have dropped recently, basically reversing the entire move, I think that's also a rather bearish signal for the dollar short term, right? Because when inflation pressures increase, the dollar will rise as well, because people anticipate no rate cuts in the near term. And now that oil has decreased, that's good for people speculating on rate cuts. And I think the as long as the dollar keeps on being weak, and as long as rate cuts are not entirely priced in, we have a good environment for risk assets. And I think that in the last few days, the macro developments have been more in favor of speculative assets, precisely because of what I've just mentioned. What also needs to be noted, and that is very important to the market, is that in a few days we have officially the end of the tariff pause that Trump did announce a few weeks ago, right? If you remember. Now, tariffs may appear not to be as important, and I mean they're not, because in April they have been priced in, but they still matter to monetary policy, right? Because Powell's only argument now is that inflation risks are high. We will consider cutting interest rates if inflation starts coming down, right? And of course, trading deals are important, because trading deals will mean that there's a chance that tariffs will be decreased or completely dropped. And currently, that is the only source of inflation pressure, right? So we will see what will happen at the beginning of July. And obviously, the more trading deals come in, the better for speculative assets, because they will keep the dollar weak, at least in the short to midterm. And we have the PCE inflation data right on Friday, which is the most important inflation measure for the Federal Reserve, which has been declining in the last few weeks, but which will come, or is expected to come above last month's print for the first time since November, if I'm not completely mistaken. So a first good sign for speculative assets would be if PC inflation data comes in line with expectations or even below it. So that's one data print that will matter. So this is more or less it. Inflation will be important because it can keep the dollar weak, which is positive for speculative assets. On the other hand, if inflation keeps rising due to tariffs, or if geopolitical tensions catch momentum again and oil starts rising again, that will increase inflation pressures again. That can keep the dollar strong, and that would be more problematic for speculative assets. So that's pretty much how I see the macro currently, and what we need to look at in the near term.
Yeah, good points. In many ways, I tend to agree with a lot of what you're saying, but I look at it from a more proactive point of view, and it's to determine what can we expect in the coming months to the best of our abilities. I like to think since April 2nd, when these tariffs were announced, when they were originally brought to the surface, the first response, from those receiving it, was to briefly combat it, strong arm it, at least appear to the media that the tariffs that were being pushed were unfair and unreasonable and catastrophic to economic growth and health, and to some extent that's true until we realize just exactly in terms of how much for example, the U.S. was being tariffed, that maybe it was a bit more reasonable and sensible to come to an agreement, not to just straight up, fight the claims. Instead, work together and find some sort of solution. And I like to think over the past couple of months that we've seen this progress and not retaliation. Maybe it was a couple of weeks of that between China and the U.S. going back and forth, but these are two very very strong nations with tons of resources to benefit one another. So that kind of calmed down. And really, what we've been seeing is more and more of positives coming out of the whole tariff war, for what it's worth, right? So from a proactive standpoint, I like to think that as the more time goes on, the less and less of a concern it becomes, just for the simple fact that everybody's got their best interests at heart, and that's to work together and to come to some sort of agreement. I think this whole inflation, the whole thing surrounding inflation at this point in time seems heavily tied to geopolitical tensions, and once again the tariff escalations and wars, right? So again, if this is the only thing that stands in the path of inflation rising, from a proactive point of view, right, we can only assume this part improves, or at least gets better, especially when we consider how quickly this little tussle between Iran and Israel, for example, has been resolved. I like to think that that's one of the easier agreements of a ceasefire I've seen so far. So in that sense, unless something unprecedented were to happen, but that's usually how it goes with these sort of things. I like to think that the response and cooperation was as good as we can ask. Especially for two titans. I call them titans because those are very, very heavily influential nations, especially when it comes to these sort of things. So in that sense, I think the geopolitical tensions will die down a bit, as long as everybody behaves, right? Because the second three titans start battling, everybody else starts to battle too, right? So in that sense, I like to think that part has kind of been deflated. And moving forward, I like to also think that tariffs will become less and less of an issue, especially if the major nations cooperate with one another first and foremost. So again, I'm more on the side of leaning that, although if this inflation rise in concern has any merit, it's because there's reason to believe that these tariffs won't be resolved anytime soon, which I have a hard time believing, just from a little game theory standpoint. And I feel like the longer this goes on, the less and less of an effect in inflation. The less and less inflation will be affected by this, right? So I put that. I consider that when making my assumption, especially on Powell's testimony yesterday, and especially on his comments towards his only concern being tariffs and geopolitical tensions causing
Yeah.
potential inflation back again, right? So again, if this were to be resolved, I can't see a reason why we'd have higher inflation, but at the same time, with everything as it currently stands, I could see how they anticipate it. I don't understand how they also don't consider the fact that it's probably going to get much better before it gets worse in terms of tension between two trade partners. So that's, I think, an angle they're missing, they're not considering, given the past 3 months, because it hasn't escalated or gotten worse. It's gotten only I want to think a little bit better, especially knowing exactly what was announced on April 2nd. I like to think that you've had the better case scenario in terms of people just working to make something acceptable for both parties, right? Anybody that's involved, each coming up with their own individual agreements. So on that front, I think the inflation concerns, at least in the immediate present, are warranted, but I also believe that it's being overlooked and more pessimistic than anything to assume that this will be something that persists for another quarter, a whole biannual segment. So that's my only concern to pick with that. The dollar dropping is indicative of a lot of things, like you said. Potential inflation, but at the same time, the anticipation of a dollar becoming cheaper to borrow, which means assets in general outperform, which does not provide the incentive to stay put in hard cash, right? It makes more sense to um, outperform, the dollar that you're holding, right? So that will probably give incentive for, like you said, risk assets and assets in general. Um, as far as the legacy markets go, just covering up. As far as legacy markets go, I think they've responded in a way that I don't even think they would have. So that's interesting. Again, I like to think that markets market and its participants are done with the shenanigans and just assume um, we're worth much more than this. And like any sort of resolution, is the word resolution, any sort of resolve tends to lead our market back to where it was going in the first place. So I'm happy with that. I'm pretty positive with that. The only thing that probably concerns me a bit is the Dow Jones, which is probably the slowest to catch up. In terms of oil, like you said, ever since the tensions rose and we're pretty much deflated, we're pretty much back to where we started before all this shit happened. So that's good. Everything's just kind of reverting back to normal. The market's kind of, indicating to us that it's over and done with, at least for now. And gold, not much for it to recommend to me here, but for the most part, I agree with a lot of your points. Just I look at it a bit differently, a little bit more objectively, and I try to pre-plan what I think will happen. And like I said, you have one side that predicts this will continue to persist and probably get worse, and that's the reason for being cautious. But then on the other hand, we contradict ourselves with all the factors we do see that could suggest it's actually going to get a lot better from here. So I'm conflicted on the decision once again to hold off on the rates. I think precautionary measures for something that's months away that can also change at any second is a bit a bit too safe, a bit too optimistic, too pessimistic. But I respect it, right? It's just again it contradicts where the market wants to go, and for that reason I have a problem with it, and I think it's being overlooked. But other than that, um, macro has been nothing short of for lack of better term, it has not been boring in the slightest. It's been quite eventful, and this has been for the past 6-7 months now. It's just nonstop. Is it? It's just there's always something to discuss. So in that sense, I think we've been you know I think we've had more than enough to discuss. Every week feels different from the next, so in that sense, it's pretty good and it allows a lot of game theory, allows a lot of potential and a lot of moves that could be conducted because of it. But that's my opening statement. I think coming back after a whole weekend of chaos on the geopolitical scale. By the time I came back, everything was sort of back to normal. I was like, hey, it's all good now. So I'm pretty thankful for that. But yeah, I missed one hell of a weekend from what I could see. But yeah, that's those are my comments, DV, and getting a nice
Yeah,
move here.
yeah. I think the dollar is a very good indication that the market does not believe that Trump will last too long with these tariffs. I think the market is pricing in that during the summer we will get trading deals, and that will then make it easier for Powell to cut interest rates. So that is why we see this weakness in the dollar. Because if the market really believed that these tariffs will persist for too long and actually lead to inflation or higher inflation, then we would have a stronger dollar. But the market doesn't believe that, right? Which we can see from the price action of the dollar, which we can see from the price action of Bitcoin, but also stock markets. So that's one positive thing. But I do
Like to
believe,
I'd like to add on that just before you continue. It's not that one side bends more than the other. It's just both sides. Cooler heads prevail. We've seen on the side that is imposing the tariffs that they're actually not strong arming in the sense that this is what we demand and we will not settle for anything less. They've been more on the side of like this is what we should be getting, but we'll settle for something a little bit better. So it's a two-way street. It's one side willing to get a fair negotiation. The other side also understanding that maybe they've over they've overexceeded for a bit too long, and they'll come down to something more realistic. It's a perfect two-way street. One side demands something ridiculous, is able to compromise for something that's a little bit more fair to them, and one side understands that maybe, just maybe, what they've been imposing this entire time has been outrageous, and maybe they can do a bit better. It's kind of a perfect room to negotiate in. So that's why I think it's been um, not as hostile as it originally sounded, and that's good for like that's good for everybody. If both sides could walk away feeling they got something that either doesn't destroy them too much or benefits them slightly, that's in the direction we want to go in. So it's a two-way street. Both sides are on both sides are cooperating, and that these go from two of the biggest stubborn countries in the world, from US, China, to pretty much all of Europe, right? As its own area, right? It's been a good environment, right, for negotiations. So just wanted to add that there. It's not like it seems impossible, um, to see this resolved. It seems actually more likely that it will. So yeah. Sorry, DB. Sorry for cutting you off.
No, all good. No, all good. Just yeah, that's what I'm currently seeing. I think the market doesn't believe that there will not be any tariff deals, and they're pricing in rate cuts. And I think that as soon as a rate cut will be announced, or will be a certain thing to happen, I think the dollar will start reversing again. Similar price action to September. As of now, it seems more likely that there will not be an interest rate cut in July. So there's an 80% probability of that, but the probability for September looks pretty good. So as of now, 69% probability of a rate cut. So wouldn't be surprised if the market tries to price this in before September, leading to a weakness in the dollar, maybe a nice period of strong performance for speculative assets. And then whenever this is announced, or around that area, we see a nice reversal on the dollar. Wouldn't be surprised with that at all. We had the same scenario last year, right? So we had the first rate cut announced at the end of September, and we had like 2 or 3 months negative price action for the dollar before that, because people anticipated that rate cuts will come. And then on the day they got announced, we had basically the start of a run for the dollar, and that, in my view, would align very, very well with the dollar retesting these range lows of the parallel channel that we have discussed, that it has been trading in since 2008, I believe. Now, will that necessarily lead to an instant drop in the crypto market? That's very hard to predict. I tend to believe that there may be a delay, but if that is the low of the dollar, and it starts an uptrend from there, then I think there will be some competition for liquidity, because now we have a cheap dollar, right? So people are more incentivized to enter a cheap dollar, to accumulate a cheap dollar, rather than accumulate an expensive dollar. So that's more or less how I see it in the next few weeks and months. Let me share the chart.
Yeah, in terms of where crypto's going, again, I still think it's doing exactly what it does every other time. Just it's met with setbacks, and these setbacks are I want to call them the consequences of a free market, and that consequence of a free market leads to a lot of exaggeration. That exaggeration comes from people that are rather inexperienced, with really, really advanced tools or sophisticated tools of finance that they do not know how to control or how to monitor or how to use effectively, and that leads to exaggerations in price movements. And what I mean by that is large liquidation wipes, things that can otherwise turn something originally bad into much, much worse. And again, this time around, we see Bitcoin in a much more, like you said, institutionalized environment. There are a lot more serious players at the table of the number one market cap, and you'll find a lot of the inexperienced players in the rest of the market here, which is, once again, it's not just a tokenomic thing. It's not just a scarce asset thing. A lot of it has to do with a lot of inexperienced participants using very, very complex financial instruments that they don't fully understand. And again, it leads to these exaggerations, which again, it's like a rolling ball effect, right? It gets faster and faster until it runs out of liquidity to fetch, right? So when a lot of people are in an area that could be easily exposed, um, you see a lot of these exaggerated movements that seems to wipe out every single person in the area. It's it's normal, but at the same time, its natural pull is attempting to move to the upside, and I say that mostly for the phase that I believe us to be in, which is phase one, which is where Bitcoin, no matter what it's currently facing, even though it has intermediate pitfalls or interim pitfalls, it still gravitates to the upside because that at the phase that it's currently in, that's what it's meant to do. Um, so like I really do believe that like crypto is gonna be fine, especially this market in general. It's still in a price discovery phase, right, and has yet to show its true hand once this thing gets going, and we're almost there, by the way. Like we're not too far off. Like we're really close. But it's just to say, like we'll have a lot of setbacks. There's no doubt about it. But in terms of like what the daily time frames on the structure of where we currently trade at post halving, everything checks in line. I don't think there's too much to be concerned about. Again, I speak for people that hold positions that cannot be exposed or touched. I think you just give it a bit more time. You pass the summer volatility, and you'll be in a position of strength. There's no doubt in my mind. Again, you have a dollar that supports this. It's it's only a matter of time. And again, moving past the summer, I think we have a lot of things to consider that will be positives. Again, we're more likely to reach tariff deals. We're more likely to have a really strong crypto bill presented to the biggest economy in the world. So we should be keeping our eyes out for that. That's something as well that should be within our radar. We're still more than likely to see rate cuts sometime this year. Most likely at this point going to be Q4, but everything aligns right towards the end of summer, beginning of August, maybe even October. A risk on in the fall type of scenario, and that's where I think we start to see the damage get done. But again, a lot of setbacks are going to happen. Very, 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 very sensitive our markets right now to news, and the fallout of a free market is there are no restrictions. There are people that overexpose themselves without any sort of gatekeepers when it comes to risk, right? So it creates these very, very exaggerated moves, and it's very, very convincing in the moment. But for the most part, everything is kind of going exactly as it should. Um, yeah,
We
if you
almost
have anything to,
we almost have a new all-time high
we're very
for the
close.
for the futures index for the S&P 500, and I must say, I mean, we've been here when the S&P 500 was
Yeah.
down 20-25%, and what was the phrase that we've been using? Never bet against the U.S. economy and U.S. markets,
Oh, never,
and now
never.
now we're up 28%. So I think we did a pretty good job in highlighting that this was a very good buying opportunity, at least when it comes to Bitcoin and stocks, right? Maybe not necessarily for altcoins because most of them almost had or were close to new lows recently, but Bitcoin and stocks have been doing pretty well since then. I mean, Bitcoin is up what, like 30% since April? I believe so, right? Around 30%.
Repeat that again. Sorry, I was typing.
No, I was just saying Bitcoin is up or was up
Yeah.
50% more or less since April.
hmm
So that's a very good return. I mean, it's in such a short period of time.
I mean, the thing to point out here is when Bitcoin's bearish, it doesn't come back steadily to retest previous highs. It doesn't break new highs like it does like this. This is all, at least in my opinion, just looks like very, very obvious bait. And like it's just if you're a bear here, you're not comfortable, is what I'm trying to say. You're not comfortable. Every weekend, someone announces large buys in large quantities. Every weekend, despite every headline, an incentive to sell very very top heavy, it just sort of stalls out and finds its way back to where the original sell off has been met. It's just not an environment, at least in this current scenario. Um, where bears have the momentum, and in my opinion, it's at this point in time, it's the equivalent of pushing a ball underwater. It just continues, more and more effort to get it lower and lower. But again, when with Bitcoin, it's fundamentally very simple. Oh, DB doesn't like my Bitcoin talk. He said, "Fuck that."
Yeah, you just started bull post about bull talking about BTC, and I mean,
No. I'm just trying to say fundamentally, it's straightforward. At this moment in time, the most you could wipe out is way too optimistic, one-sided traders, and they get wiped out on a rather easy move, anything between 5 to 10%. Those are really easy to tag, but fundamentally, the more and more difficult it is, the more and more effort it requires to sell BDC. You need a spot push, and again, it's like we've sold a lot of spot has been sold at this area, and still it continues to fight back, right? The buying pressure continues to fight back almost effortlessly. We don't even have announcements of besides maybe another company like GameStop, right? It's just showing you how resilient it could be, and the downside to selling this on a long-term time frame is at any moment in time you can be pushed against like this, where it would require double the amount of Bitcoin you just sold to get back to prices that you were just starting to see momentum at. So that's the fundamental flaw in being a macro bear on BDC, is that it's like it requires something big, very big, to kickstart that catalyst. And right now, with everything we've been given, from tariff wars to macro, geopolitical tensions of the highest degree. We're talking, I mean, what would be worse? Maybe China gets involved. Like, that's the only thing I could see that gets even worse. It's just you have the titans of the titans when it comes to military fighting over the past 12 days, right? And if that's not enough, and if the market just brushes that off, then realistically, what would be the catalyst for it, right? And that's how you have to see it. I still think it's way too early in its cycle to determine a top. I don't think 110,000 is a fair valuation for this cycle. I think it's meant for much higher, and that's why it's being struggled to push down, right? It's this comes off more as your typical correction, your first real correction since breaking price discovery. So I think crypto's in a really
when
good spot here. It just a bit of patience, and
when
that's
it comes
something.
to reversing Bitcoin on higher time frames, I don't think that geopolitical tensions can do that, right? Like, I don't think that we macro top because there's a 10-day war between the United States and Iran, or Israel and Iran. These are just short-term shakeouts in the market, right? Or
Yep.
tariffs, for example. Like, what would need to happen, for example, for Bitcoin to find a macro top would be changes in dynamics and monetary policy dynamics, for example, right? We've had for instance, last cycle, it's very important. It's very interesting to understand what caused Bitcoin to macro top and what caused Bitcoin to macro bottom, right? Like the macro top on Bitcoin in 2021, for example, was reached when the Federal Reserve, but also other central banks, started or announced that they will stop their easing efforts that were a result of the pandemic, and start hiking interest rates and slowing down money supply, right? And then what led to a bottom of Bitcoin was that inflation started bottoming as well, right, and declining, and that gave investors a signal that central banks around the world, and at that time, what we believed the Federal Reserve as well, would start slowing down their tightening cycle and
There's a
turn
number of
back to
things
easing,
in
right?
2021, in 2022. There were a number of things though, and we always talk about it being the original The original cause of it was the rates going up from almost essentially zero, right? That was the main catalyst. But at the same time, you had some pretty annoying war tensions. If I'm not mistaken, what was it? Early 2022, the
That
whole
was later.
Russia Ukraine fiasco started in early 2022, right? So November 2021, rates are announced that they'll start rising from here. 2 months later, just when it looked like we were about to consolidate, or at least determine if nothing else is going to happen from here, we most likely do just fine, and we kind of hit our bottom here. It was kind of like this. I still remember. Then all of a sudden, we get hit with the Ukraine Russia invading Ukraine invasion, and that I believe was the dagger as well for the market because it created this panic once again, a panic very 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 similar to the 2020 COVID days because again people didn't know what to expect, they didn't know what to think. The news was all over it. They hit very very hard, and then it's not even that caused the macro bottom. I mean, what really when I say the exaggeration of a free market is what happened here was a ton of players, a ton of people responsible for holding customer funds in this industry got absolutely battered, absolutely destroyed, and that created pretty much a contagion, right? You know what that is, right? A contagion is when everything starts to pretty much chain react, almost like a set of explosives going off because one went off next to each other, right? And then after that, it's finding out the damage that was done. So it was a number of things, but yes, what kickstarted it was the change in monetary policy. Just to point out there, like what caused this momentum to continue and to get as bad as it did was because in that whole collateral, um, were a ton of companies that were trusted with funds that they shouldn't have been touching. Um, were caught as well in the crossfire, and that made it what it is today. But realistically, Bitcoin would have been fine had it just been a change in monetary policy. It would have declined. It would have lost a lot of its value for sure, but not to the extent that it was. Just wanted to give a little bit of lore. It wasn't entirely monetary policy, but it was the catalyst.
Yeah, for me, it's a crucial part in
It was the
shaping the market.
kickstart. Yeah.
But it wasn't for me. It wasn't just this Kickstarter. It was also the reason, or one of the biggest reasons. Of course, there are other catalysts as well, right?
Yeah.
But one of the biggest reasons was also that people realized that the tightening cycle was coming to an end, as we can see from the chart in the chat, right? And as soon as um, the tightening cycle started to flatten, right? So central banks started to keep interest rates flat, unchanged for a while, not hiking anymore. It gave investors a very good signal that inflation may have topped out, because inflation or high inflation was the reason why central banks entered this tightening cycle, right? And as soon as inflation started to top out, people were basically speculating that central banks will also start to ease again. Of course, we now know that the US did not ease as much as people anticipated. There has been a bit of easing last year, but not as much as expected. But other central banks have, and in my view, what could, for example, top out financial markets and Bitcoin would be another pivot of this easing cycle that has been initiated by, for example, the European Central Bank or China as well. It's not mentioned that much, but China has a big economy, right? So it's a big liquidity provider. So I think these dynamics, these changes in monetary policy also have a crucial role in shaping financial cycles when we talk about actual 3, 4, 5 year cycles, right? When it comes to catalysts such as a start of a new war or a sudden shift in policy in trading policy, I think these are more short-term catalysts for movements in the market. But I don't necessarily think that they, let's say, macro bottom or macro top a cycle per se. They're more like, as I said, short-term shakeouts to the market.
So this goes back to what I said, and why I emphasize that Bitcoin is when I say a free market, with it comes its consequences, and with it comes a lot of lack of restrictions and lack of gatekeeping, which leads to a lot of irresponsible, shady actors and experienced people, everything of the above. It invites any and all participants to the market. So again, if these funds were to somehow get into the hands not only of inexperienced players using positions they cannot front, if it also gets into the hands of bad actors and malpractice users, because there's no regulations and there's no real black and white area. It's always a gray zone. What happens is these short-term catalysts can implode an entire 4 years of progress. And I saw that again in 2021. It would have never, and I mean this sincerely, it would have never been to 16K. It should have been anywhere between 28 to 30, 36. Mathematically, 28 to 36 would have been its low. The problem is it imploded. And with the reason why it imploded was because of short-term catalysts that were seemingly so bad created such a panic that even those who knew mathematically that a price should be bottomed out here, the chain reaction, right, mixed with bad actors and people that aren't following regulation or status quo, created this much bigger crater that took months and months and months to recover from. So when it comes to legacy markets, I agree with you. A lot of it is due to shifts in monetary policy and has a lot to do with data. But when it comes to a free market, a truly free market, 24/7 operates on its own peril. Um, a lot of it has to do with who do we trust in this space that is responsible for holding assets. Are they misusing them, or are they actually good, do they have good intentions? Because we found out in 2021, even the ones that were the most brand recognized, seemingly reputable people responsible were caught in a crossfire. Now, whether it was deliberate or not, we don't know. But I'm just going to assume that wrong place, wrong time, and there was no way to protect themselves. And it's just to say, with a free market, this is the consequences, is also the benefit of being in one, right? You're given opportunities you'll never see in legacies, and you're also dealing with catastrophes you'll never see in legacies, right? So yeah, don't get me wrong. The monetary policy overall changes the sentiment of a market. It changes pretty much the entire direction of it on a slower term basis. It's the
Mhm.
catalysts, right, that accelerate this. And the only thing that's terrifying about a free market is that, once again, like I said, when it's in its infant stages, right? Because let's be honest here, 10 years for just over a decade for a market. I want to say what, about 15 years? No, a good 15 years for a market is still in its infant stages, right? It's still in its youth stage. It's nowhere near as sophisticated as markets that we've seen that have been trading for over 100 years, right? It's just with that comes its risks. With that comes its risks. With that comes regulations and ways to further tighten the space. But for the most part, it's like a wild west out there, is what I'm trying to say. I guess it's quite literally the best place to be because of it. But yeah, it's things that could scare people, right, in the immediate short term could create a panic of the likes of which you've never seen before. And it doesn't have to be rational. It doesn't have to make sense. It's just, this is how the market responds, and that creates a collateral, and it creates this big snowball effect. And there's no, you don't have circuit breakers to get people to calm down, to rebalance the books. You don't have none of this, right? So a lot of the times, bottoms and tops are way higher than people think, or way lower than people think. It's that's why when you have Bitcoin in a parabolic state, it surpasses people's expectations. When you have altcoins in a parabolic state, it surpasses people's expectations by a long mile. And just like when we expect the bottom, including myself, back in 2021, it was just so much lower than we actually perceived it to be, right? From a mathematics standpoint, almost 40 to 50% lower than our lowest point, right? So just to say, it's that's the pros and cons of a free market. Is it's someone's opportunity of a lifetime. I don't know why I said that, but I just felt like people should know the context. We operate a bit differently here. It's
What
we
would
have no
what would
choice.
be what would be like, say, a macro top is reached for Bitcoin at some point? Doesn't have to be this year, it can be next year, whenever. What would be like your maximum
of
down
this
point for
cycle.
BTC? No, no, I
Drawdown?
mean like you've talked about like your targets,
Yep.
but what would be like if Bitcoin or if financial markets would enter a bear market after the cycle? Like where would you see
I stick to
Bitcoin?
the rule. I stick to the rule of every cycle I've been a part of being anywhere between 70 to 85% of a drawdown.
So you still believe that Bitcoin will give a 70% drop at some point?
Yeah, the problem is I think people are calling it too soon. So again, what's a 75 to 80% drawdown when you're at 250, 270K? That's my fighting point with people is that yeah, it's not that I don't disagree that a 70 to 80% drawdown is not likely. It's happened at literally every cycle we've had. Every cycle we've had, everybody assumes no, 50, 60%, that's my buying spot. And maybe that's your area to start buying in. But there's always with a free market, there's always someone caught on the shit end of the stick by assuming it can never do that. And this happens to the most. All models will be destroyed, right? When it comes to this market, and for that reason, people will always blow up and people will always grow exponentially. So yeah, I talk about 70 to 85% drawdowns. The problem is people are talking about 70 to 85% drawdowns while it's worth 110K. It needs to be worth double, maybe even triple what it's currently worth for me to assume that yet. It's then we'll talk. We'll talk about what a macro bottom is here. And then if we look at 250 to 350K here, and I really do think I'm undershooting what it's going to be worth by the end of this cycle, and I'm being sincere when I say that. What will be an 80% drawdown by then? Probably even higher than the prices you're currently trading at. And that's where I think most people just misunderstand this asset they're trading. It's what allows certain people to succeed. You know, effortlessly in this market, and why some struggle. It's just they're too conservative about both sides of the market. It's either they think it can never get this high when it just melts people's faces, and it can also never get this low and it just melts people's faces. It's an environment like that. So yeah, I'm going to answer your question with 70 to 80% drawdown, like it's typically done since it's been created. It's just it's a fair assessment, you know.
All right.
60 to
Yeah.
80K bottom, next bear market. I think you see, like I think that's fair. Like again, like what would be? I'm not off the math off the top of my head. I get that's a bit more difficult to determine, but like what would be an 80% drawdown from the targets I have in my mind? Damn. See what I mean? I don't think 220K even makes sense. I really don't. You know? So I expect it to be even higher. I don't think I don't think we're ready for this. I really don't. The participants and the shift of sentiment so quick. There's too much skepticism. There's way too much skepticism for it to be a macro top. It's not. Like I don't see euphoria. It doesn't exist. It hasn't existed for over a year. But yeah, 12 minutes left. So I guess we'll instead of just going on a bullish tangent, do we have any questions that might need some answering or? 48 is a macro low. Ooh. Okay, first 30 minutes of stocks aren't so bad. They're not as bad. There won't be euphoria anymore because we're all a little bit dead inside. I don't know, man. I feel quite the opposite. I feel pretty good. Um, because the time to be stupid with your money will come. Like it's just not there yet. You're not there yet, and I don't know why. Every participant tries to force this. They're forcing it, and it's like you will be punished every single time. Every single time. It's you're not going to get away with it. It's a free market. They will punish every single time. So, but then There's a moment where MMs have their bots turned off and they let it run because they know it's the right time to create a market. But right now, it's just they'll keep distributing. It'll just be perpetual distribution until they're comfortable with Bitcoin's price.
What I want to see from a TA perspective is like if you're speculating on higher, is that BTC invalidates these higher time frame divergences. For example, on the weekly time frame or the monthly time frame, as a trader that is not bound to the fundamentals of Bitcoin, like me, I see it as an asset to buy and sell and maximize profits. I don't care about the mathematics behind it, the fundamentals, right? But as a trader, and from a TA perspective alone, this is something you want to see get invalidated before considering higher levels. And as long as this is not invalidated, which I mean needs a weekly close above potentially 110K, something like that, I remain a bit cautious. I remain a bit cautious, and now you may be saying that yeah, that cautious is your source of optimism, right? But as a trader who sees BTC as another asset category for trading for maximizing profit, this is not something I can ignore, right? So I wanna see this happen, and
Facts.
then we can talk about higher targets, whatever that may be. I mean, after that, Bitcoin is literally in a price discovery, right? So the opportunities are endless. But first, I want to see this before getting too euphoric, right? And then we can have other discussions.
It's not euphoric. It's just an analysis. That's what it is. The same way you have your analysis, and the way I feel like it's just a bit undershooting it, just a bit too much, just a bit too much. I mean, again, if you're a bear to be fighting at these prices just seems ridiculous. But I respect the
It's not about
cautious. I respect
it's
the I
not
respect the
no, no,
what?
it's not about being a bear. It's not about being a bear or a bull. It's just about following TA, right? And if I
Yeah,
follow TA,
the problem is about TA
so I
sometimes
want
is we're dealing with an asset that would require what has just been sold to be sold again. And that's just really hard for me to assume unless I'm missing the picture here and I can't see the Bitcoin leaving exchanges in droves, and I can't see more greedy participants with way larger amounts of capital entering the space. It's not like I can't see the U.S. government, especially or I'm sorry, imminently creating a plan that promises to buy or expose themselves to it. I don't see the battle here, and that's what I'm trying to say. From a fundamental perspective, less of a TA, because the TA will be fine. The TA will be fine, and I respect it completely. But just like from a fundamental perspective, there are so many other things I'd choose to sell over this, or there's so many other things I'd choose to be cautious on, except for this. I guess is my point. You have a market littered with endless downside, like endless downside on any 10 to 20% rip. You can literally just click the sell button, and run away. Whereas this one has been a nightmare. It's been an absolute nightmare to time it. And that's just my argument on that. Is like BDC when it comes to having to sell this thing, it's a fucking nightmare. It's and I guess that's what it is. But I understand. You're still waiting for your bear div to invalidate, right?
I mean, look, we've been both bullish on stock markets and BTC at 75K, right? I mean, people
Yep.
have been on stream. We can't deny them, right?
Yep.
So I wouldn't call myself a perma bear, right? Because at
No.
75K,
That's not what I'm saying.
we,
I'm just
we,
waiting
we,
for you.
we yeah, but so at 75K, we were saying, well, from a TA perspective, and from everything we see unfolding, it's a nice buying opportunity, right? So I'm just the type of trader that is euphoric at these times, when everybody's is scared to buy, you know what I mean? And I
Yep.
mean, when everybody's comfortable to buy or to long, I'm just more cautious. It's not like I'm always cautious, you know. People in fundamentals or that follow me know that they joke around. DB stands for double blood because I like to buy liquidation events, right? So that's where I
Best way to make
personally just
money.
yeah, that's just how I approach markets, right? So if you are a bear when you are, I don't know, maybe up 35, 40, 50%, I don't think there's anything wrong with it. So I was bullish at 75K. Now I'm a bit cautious and I want to see how this unfolds on the weekly and the monthly. If they invalidate, very nice. We can continue to be bullish for a few more weeks and months, right? But as long as that is something on my way, just remain a bit cautious and that's fine. And if Bitcoin drops again to levels that I find interesting, then I'll turn bullish. You know what I mean? I just use inverse psychology to approach this market.
Fair enough. You believe in the philosophy of not betting against the U.S. economy, right?
Yeah, absolutely.
Okay. Okay. So if a
Bitcoin is
U.S.
not,
entity decides that Bitcoin becomes part of
but that's an if,
its
right?
operations, it's not an if, it's a guarantee. What I'm trying to say, it's a guarantee. You
What
know,
is the guarantee?
it's that Bitcoin pretty much brands itself side by side with the U.S. moving forward. Like it's a done deal.
Yeah, I
That
mean,
that part is a
yes, that's. I
guarantee.
mean, I've said it right that
Mhm.
Bitcoin has matured a lot as an asset. It has been become more institutionalized through
Yeah, but
ETFs, right?
you
So
trade it. I understand completely. It's just it's more
in,
for
in,
the like when we come from like a macro, and all TA aside, macro fundamentals, right? Fundamentally, um, I want to say the most underappreciated asset to ever exist in the world in its current environment will be this. It'll be this, and again, the number is an illusion. It does not represent or properly justify. Um, it has yet to prove its effect, is what I'm trying to say. But again, this is a bit more of a deeper belief, right? On a longer
uh,
scale. So if we're
yeah,
dealing with
absolutely.
weeklies and monthlies, I understand your perspective. I have the same approach, right? Like my corner is always updated about being around 106, 330 is where I can assume
I
things
don't
start to
doubt.
pick up again, right? I have
I,
the same
I
approach.
I don't doubt that Bitcoin. I'm actually pretty confident that Bitcoin will see the valuations that you just brought up, maybe even higher in the next few years. But we also need to consider what we see in more short term, right? If I, for example, say now Bitcoin will go to 220K, somebody can be buying Bitcoin right now because he or she doesn't understand that you have a multi-year time frame perspective. You know what I
Oh, I
mean?
don't.
And
Oh,
that
I don't even know if
if
I'm
this
talking about a multi-year time frame. Is my point. I'm talking like
well, okay, but
six month time frame. Yeah.
as long as this divergence is not invalidated and you buy here and you end up 10-15% lower,
Yep.
then people will blame us, you know.
And
They
that's the beauty of being like because like we'll consider alts in very very tricky positions. A lot of them are 70-60% down from their highs. There's always a new level to consider to break above before we can consider a move higher than that. Bitcoin in all its form right now is in the cleanest environment it can. It has highs. You take out those highs, you put back your risk. It falls below those highs, you could set yourself some very clear rules. You buy at the last known level that we saw a large influx of buyers. You can hedge just before the highs that we failed to take out. It's in the easiest environment to trade. So either you take a small haircut if you're wrong and you go back risk on, or you hold out for a potential 10 to 15% drawdown, and then look for exposure again. It's in a much more simple environment um, in terms of approaching it in comparison to alts right now, which seemingly have endless obstacles above it at its current stage, which makes
I'm
it
telling you, Flip,
what?
um, invalidate these divergences and print a weekly close above 110, 111. And
Yep,
next stream, we will both talk about these higher time frame targets, and I'll support you. You know what I mean? Like,
yep.
I'm not the type of guy that will just say, "Well, I was wrong, but this happened." No, no, I'm open for both sides, and if I see the trigger, then
It's a
I'll,
very
I'll
very
join.
straightforward hedge. It's not a complicated one. It's fairly simple. You break the highs, I'm long. You fail to break these highs, I'm hedged until further notice. I think there's a better opportunity lower. It's a very very straightforward approach. When you're playing price discovery, it's probably the best way to play it. I'm the same way. It's just I don't believe in 110K. I believe more in 106. Being above 106 is very significant, at least in my books.
I see what you see. I
Yeah,
think that's an important level as well because that's the
it's
highest daily
106.
before these new highs were printed. But I'm saying 110, 111 because that would more or less invalidate that weekly bearish divergence, and that for me would be a very good signal.
Yeah, it's you're playing the last known highs, and I respect it. It's just we have more data. We just have more data in this doozy of a range. We have this more data, and anything above this just considers that whoever has used this as a sell point is officially being flipped, right? And again, it's their problem now. Their problem is how the fuck do they either cover? Because if I assure you, any big players that had to cover here, if they haven't covered already, they're sweating. They're in a very very sweaty position, and again, um, their admit to defeat can send us in places you wouldn't believe, right? So I understand. I respect that you're playing the last known highs, and there's nothing wrong with that, and it's a very
I'm a
very
trader. I'm a trader. I
traditional.
mean,
It's a traditional
yeah,
approach. It's more.
it is.
It's
It is, and
yeah. It's very
I don't
very
have
old
a problem.
school, and I
I don't
respect
have
it.
a problem. I don't have a
Yeah,
problem with that. You know,
yeah.
that's how I've been approaching the market, and I think some members appreciate it, some not. I don't know. I'm just not the type of speculative trader. I'm not saying that's wrong. You know, you're
Yeah,
more of a speculative trader, and
it
that's
is a
fine. That's your
speculative
approach.
market. I am born from a speculative
Yeah,
market. Yeah, it's
I'm not. I'm not saying this as an insult. It's just your approach. You're known with that. You're. That's the approach that has worked for you. I'm a bit different. Something else has worked for me, and I think
mm.
it's both fine as long as it has worked for us, right? There's
And they call me
nothing
the
to be.
grandfather. They call me the grandpa. That's
Do they?
crazy. That's crazy.
I
Yeah,
mean,
I'm more like a new age trader. They call me the grandpa because my bread and honey, my bread and butter
I don't
is
know.
BDC,
I mean,
right?
my
You're more the
my philosophy.
grandpa.
I am. But my philosophy is always like I'm Benjamin Button, right? When the market drops, I become younger. When the market increases, then I become an old guy and more conservative. So that's just
Yeah,
how I approach the
it's
market.
beautifully put. That's beautifully put. I thought you were gonna say you're Benjamin Graham or something. Not Benjamin Button, but yeah. DB, we're out of
All right,
time here. Yeah, we're out of time,
good
guys.
discussion.
Good discussion. Good discussion. Good to be back. Um, just throwing some side notes. Thanks to everybody that reached out to me over the past week. Greatly appreciated. Love every single one of you. DB, thank you for doing these streams with me every week.
Of
You know,
course, my pleasure.
yeah, it's
Always my favorite.
yeah, man. We got a good thing going on here, and I want it to continue. And it will continue. It will continue. It'll pick back up. It'll get more busy, guys. It's the summer. People tend to move away from charts. This is not just regular people. It's firms. It's props. It's everybody's taking their vacations now. Trading's stressful, right? So when it's time to take a break, people take a break, and it's like a unanimous decision. It's very rare. Summers, go crazy. There are exceptions, and we've had a pretty rocky summer. It's not that prices have been doing anything strange. It's just it requires a lot of attention this summer. You know, Pretty much since mid May it's been rocky and it's been bumpy, and it requires you to check in every now and then. So it's been a hot summer in that sense. But in terms of volume, trading volume, it's much lower than what we're typically used to seeing. So just keep that in mind. Try not to force ideas. It's not the environment for it just yet. But it will come back, and it comes back with a bang. Expect this towards mid-August, end of August. I would expect trading to start getting really nuts again. So it's normal. If you're feeling a bit cornered, or feeling like you're looking at charts and you don't have really an idea to go off of, it's normal. Don't break your head. Don't go crazy. If you got some time, this is the time to really sharpen your knife, as they would say. Get more familiar with your system, your strategy, backtest some stuff, create hypothetical trades, see their progress, see how they work. Just go in the shop, and organize your toolbox, and sharpen your knife a bit, see what's working and what's not.
But with that being said, we're out of time. DB, it's a pleasure. Chad, it's a pleasure. Next week, same time, same place. You know where to find us.
Yep. Thank you, guys. Thank you for
All right,
joining.
thank you, everybody.
Take care, everyone.
Take care. Take care, guys.